Previously, I've noticed that DCA has got a very, very bad reputation in the retail industry. And this is because you essentially add into losing trades. So inherently, people that are uneducated on the strategy and the management behind it view it as gambling or a silly way to trade, when in reality, it's actually one of the most profitable ways to trade. But it does require a lot of management and sort of understanding of market dynamics and general trading information. Okay, so DCA requires a couple of different things before we get started. So it's very, very important to have some way to manage and measure and track the positions. I use Excel because we can essentially use formulas in Excel to make this a seamless process. So for example, we can use an average function to be able to get our average price, because if we are let's say we enter here, and we enter here. If we end up closing this position, technically our new average price becomes roughly here. But that's not accounting for this losing trade. So we have to be able to account for losses that we've closed and moving up our average price by that, not just open positions. And that's a big mistake that a lot of new dollar cost averages make. So second of all, I do it on the 30-minute time frame using an RSI and Bollinger Bands. Obviously, we use an FX replay for this. I tried to do this video a couple of times. I did try to use it on MetaTrader. It just wasn't visually detailed enough. TradingView, you can't, on replay mode, you can't close out positions. You can only close out a full one. You can't close out additional entries, if that makes sense, or individual positions in one sequence. So final thing is, there's a few different terms that I personally use that, may be different depending on who you listen to or whatever. So a sequence is when you have, or when I have multiple positions. So let's say I enter here, enter here, and enter here, and enter here. This will be a sequence. And then once I've closed out, the sequence is done. Then there's another one, and this is called accumulation. So if I am enter here, I might just take profits here, and that's it. And that's because I'm accumulating P&L. I'm accumulating pips to offset any future losses I have to realize, and that's it. It's very, very simple, but it is a completely sort of new approach and new concept to anyone that hasn't done this before. So let's get into it. Let's play forwards and see what we can get. So I'm going to explain things as we get there, and I'm going to sort of show you the process. This isn't a way for me to show you the profitability really or anything like that. It's more just to show you the process, the way I see the markets and sort of the criteria that I follow in order for me to actually get into a position. So I'm going to try to not edit this video in terms of cutting it up and things, because I really want it to just be as it is. So yeah, let's just see. So far, there isn't really anything going on. You would really want to be looking at sort of daily and weekly timeframes as well, and monthly, because we need to just sort of pay attention to where the market's going. I've already done this. Obviously, like I said, I've tried to record this a couple of times. So the idea is just draw up a couple of lines, just see where the market could possibly want to go next. What are the overall trends? Because what you don't want to do is look here on the 30-minute and see this sort of bearish structure, but the monthly, the weekly, and the daily are all rallying to the upside. This is just short-term downside. Now that can work, but obviously the safer you can be, the better. So that brings me on to the next thing, which is position size. So I'm actually going to enter here. So this account I set this account to about $100,000. So I like to use 0.01 per $1,000 in the account. So if there's $2,000, I'd use 0.02. If there's 5,000, 0.05. If there's 100,000, I would use one lot. So that's just the way I like to do it. Obviously, I would suggest starting even lower if this is something you're going to do, because it's very mentally intensive. This is one of those strategies where the hit rate is extremely high, but you will have those periods, and it's inevitable, it will happen, where you'll enter and the market rallies against you, and then you enter again, the market continues to rally, and you enter again, the market's rally, you enter again. And obviously it's fine as long as you're managing the position size. There's no problem at all, and you're managing your average price and you're cutting losses when you need to. But if you use slightly higher lot size and you have some sort of emotional attachment to the losers, you are going to blow your account. This isn't a strategy for the mentally weak or the emotionally attached. You cannot approach it like that. Okay. So first of all, we've got the position. So we need to just input the entry here. So it's 1.10334. The size is 1. So we don't have a return yet. Obviously, we've not taken profits. We don't have the pips yet. We've not taken profits and exit. We've not closed the position yet. So we don't have that. So we're just logging the position for now. Obviously, you'd want to have the entry date and close date and things. But for backtesting, I'm not going to worry about that just yet. So the market's slightly moving against us. The reason I entered here was because we broke out of the Bollinger. The RSI was overbought. I only sell Eurodollar. I don't buy it. There's a couple of reasons for that. One of the reasons is because if we look at a lot of black swan events or a lot of global catastrophes, generally, if we're in a short Eurodollar, that's going to work out really well for us. So, I'm not going to go into that too much here, but if you want to go and do some research, just look at the biggest movers in Eurodollar history. Obviously, it's not always the case. We'll have certain periods and certain situations where buyers will favor the euro over the dollar. But generally speaking, a lot of the time, it does work in our favor. The other reason is, obviously, the dollar is the world reserve currency. The US economy is a major, major player. I would even argue the biggest player, or one of the biggest players at least. So I don't really like to bet against it. Swing trading, obviously, that's different. That's a different strategy I do with different rules and things. But for DCA, I like to be on the same side of the dollar, even if the data doesn't fully align with that. So I'm going to take profits here. So I'm just going to put in the exit price, which is 1.10095. And again, on a real account, or if you're tracking real stuff, you would want to also include swap, because you do get positive swap, which again is a really positive thing for short Eurodollar only, because if you're in a losing position, you're holding it for a month, which can happen. Happened to me before, where I'm in a really horrible losing period where the market's just moving against me. That swap builds up, and it really does help in the long run when you're starting to slowly offset some of those losses. Because if you're in even if it's a 3-4 week drawdown, those swaps will, it might only be 3-4 pips worth of swaps that you're getting, but that just helps. It really, really does help, and you'll have to trust me on that. So, what's the pips on that? Is that 287? I'm not sure about FX replay. I just want to double check. Is that what that means? Okay, no, it's not. So we've got 23.6 pips. Let's say 24 pips here. Oh, actually, you know what I'm going to do? And again, sorry, I know I'm sort of going backwards and forwards. Like I said, I'm not going to edit this and cut things out. This is sort of how I normally do videos, but I cut these bits out where I'm trying to think out loud and things. So I actually have a formula here on my real sheet. So I can figure out the pips here. So let's just do this. So it would be A2, I think this is correct. And then it would be B2. Yeah, there we go. So you can see that's calculated the pips for me automatically. Then what we need to do is get another formula, again, which I've got here, which will take we can get rid of H7 because that's the swaps. Obviously, we're not accounting for swaps here. So pips would be on C2. And then the size is D2 as well. There you go. So you can see 239 profit and 239 return. So there you go. That's what I mean. We can figure out these things quite nicely and very, very quickly as well. Again, once you've got the formula in, you can just copy and paste it, and it's very, very fast after that. So there we go. This was an accumulation trade because we're not looking to catch a runner here. We're just taking profits and we're looking to build that buffer. The market could, like that, it could just run. But we don't care. That's not what we're here for. We've got to accept the fact that yes, DCA has an extremely high win rate, and it's very, very profitable in the long run. But the payoff to that is you're not always going to catch runners. Sometimes you will close a trade and the market will continue to run. It's just like any other strategy, actually. You're never always going to catch the full thing. So I'm actually, I was about to sell there, but I missed the entry, unfortunately. I'm not going to re-enter just yet. And again, this is a little bit discretionary. I am, in general, looking for overbought markets or overbought conditions. I really like to trade news candles as well. And I do that quite a lot on stream, actually, where I'll be trading news, whether it be NFP, CPI, FOMC, whatever it may be. I'll look for a bullish candle with high volume and I'll fade the entire thing. And again, it works very, very well, but sometimes it can drag on. You end up in drawdown. But in theory, you really want drawdown in DCA because you want to be able to build up that larger position. But again, the position size is very small. So although $239 sounds great, that's 0.2 2-3% of a return on the account. Obviously, it's $100,000. We're taking a $239 take profit. The percentage wise isn't great. But again, that's just one of those downsides of DCA. So I'm going to enter here. Let's see what happens. So let's just play through. May enter again soon if we can approach this previous high. Just using basic structure for this strategy as well. We're not looking to do anything overly complex. We've got a little bit of profit. Let's see what happens. Sort of just range bound here. There's nothing to do. And what we can do actually is, and we may be able to get to this slightly later if we get the opportunity, but the accumulation you can do while in a losing trade. So just to briefly explain that, if we are short here, and let's say we started shorting down here, we're in some drawdown, we can see that this market's sideways, it's just range bound. We sell the top, we take profits at the support. And obviously, again, the profit will be very small, but it's just accumulating pips. We're just building up that buffer, Now again, I'm actually going to leave this blank, this line, and we're going to go here, and that will make sense as we get some more positions going. So as I said earlier, we want to be able... sorry, let me just write this out. We want to be able to calculate our average price, including losers. Unfortunately, not had that opportunity to show you just yet, but hopefully we can get one of those messy trades, and I can show you exactly how we would go about managing that. So let me just fill these boxes in. See what I mean? You can just copy and paste it. And again, automatically, guys, 166 return, 166 return. Very simple, very quick. The journaling process, don't skip it. It's very, very important. If you're not tracking average price, and again, we can show average price soon when we get the opportunity to. Yeah, you'll see how important that is. Okay, so we're rejecting this double bottom. So now I'm not looking to sell at all because I don't want to sell the market when it's relatively oversold, because again, that would be a bit silly. Remember, we're only looking to sell. We're not looking to buy this support. And when I say we, obviously I'm talking about me. That's the way I do it. So let's just see. So again, we've missed a huge move here. We could have kept both positions and been deep profit, but that's not the goal of this strategy. We're not looking to do that. So I'm going to sell here. Not really much of a reason to, but we have broken. We slightly retested here. Again, nothing complex. We're just looking for very, very rough entries. We're not trying to get these sniper entries or anything overly precise. We just want to get into the market. So here we go. We've got this one written out. Remember, size of 1. We don't have an exit yet, so let's just play through again. So let's see if we can get some drawdown here so I can show you the management. So I'm not looking to enter just yet. Let's see what we can get. Okay, here, I'm going to enter again. So this is key, and this is why I left a bit of a space here, so we can segment those sequences. Remember I was telling you about sequences? So I'm going to sell here, and I'm going to add, again, our entry price here, which is at 1.09806. Now, what we do is we create our function, so we need average. So we take our average and we take these two numbers, and this is now our average price. So let's just copy this number and let's put this here. Let's go to coordinates, add that. So now the blue line is what we call our average price. Now, if you don't know what an average price is, it's very simple. It's just our break-even level. So obviously this trade would be a loser. This trade would be a winner. So if we close both at this level, it's a net zero. We don't lose, we don't win. It's completely break-even. So hopefully you can start to understand why that's so important. But again, we'll run through it. Maybe we can get this to be in drawdown and I can sort of show you a little bit more. Well, actually, I probably should have taken profits. So I was scrolling a bit too quick. But let's see. Yeah, okay, so let's close that. So that would be... I'm actually just going to color this one here so I don't get confused. Never mind, I can't figure out how to do that here. Okay, so exit price is 1.09. 1.095540. It's the same for the second one, so let's just copy that down there. Oops. Again, we just copy this pips, the size as well, and of course our profit here. There we go. So now again, we just add this up. Remember, we want to keep track of all our trades, but we also want to be able to keep track of our sequences individually. We're not looking to do anything that would ignore that, because it's very, very important. So we can get rid of that. So now we can see this sequence here gave us a total of $356. It gave us 35.6 pips, and this was our average break-even price. So I'm just going to close both of these now. So there we go. Now you can see the win rates. I mean, obviously it's a very small sample size. I would say that you really need to go and back test this yourself. Before we go on any further, I know this is already quite a long video. We're at almost 20 minutes. But this isn't something you would just go and do on a live account. You need to go and back test this. It's imperative. This isn't something you can go and live test. Even with small position sizing, all it takes is one thing to run away from you, regardless of the position sizing. You're going to be in very deep trouble. So again, this isn't me trying to tell you to do this strategy. I'm purely just showing you my thought process and the way I trade. This is what I mean by a news candle. So now again, we start a new one. So we add this into our journal, 1.09942. So we're always keeping track of our positions. There's no if, buts, and maybes and whatever else. We are just managing. That's all we have to do. Entries doesn't really matter that much. As long as we're managing positions, we're going to be safe. But again, it takes a lot of mental pressure and mental maturity to be able to do it properly. So again, we're going to continue to play through. Not going to take profits just yet. Let's see if we can get full correction of that candle. So let's see, what do we get here? Would have been nice to actually get a second entry right at the top there, but unfortunately no opportunity to do that just yet. So let's see what we can see. Let's see what we get here. Let me just autoplay this actually. Okay. You know what? I'm going to close this. I don't really like it's not leading into too much. So again, we're just going to log our exit price, which is 1.09756. And again, we just drag our formulas down here. Oops. And then we just delete that. There we go. So we've done that. That's good. Again, this is... There we go. I'm just going to highlight that because that's not obviously a trade. That's the result of this sequence. Okay. Oh, actually, that's wrong. Hold on. Let me take this one here. Is that right? Formula's slightly off here. Why is that off? Oh, it's because... oh, my bad. I've got dragged the wrong box. There we go. That's right. Okay. Cool. So let's, again, play through. I've still not really had... see, again, that would have been a beautiful one to hold. Still not had much of an opportunity. You know what? I'm only doing this for demonstration purposes. I wouldn't actually enter here. But I really want to show you how to manage a trade that is not going your way. So I'm actually going to sell an oversold market so I can show you the drawdown management. So let's just play through. Let's hopefully get some crazy. Come on. Upside, please. Drawdown. Crazy. Come on. Oh, I need to put the entry. My bad. Forgot to do that. So our entry was at 1 point. I know this is probably quite tedious and boring to watch, but if you are serious about learning this strategy and learning how to do it, it's imperative you fully understand it and you can see a professional process of it, because again, it can be very, very messy, very dangerous if you're not doing it properly. Okay, you know what? I'm going to actually just close this again because I'm not... Oh, bollocks, I forgot the... Oh, exit price where we are. So it's 1.09. 148. So I'm going to just re-enter at a lower price even. So again, I can hopefully show you. Let's just sell again right where it is here. So just take our entry price, let's copy that there. So that's our new entry price. There we go. Well, again, we'll just we'll take it. 1.08920. See, even on a even on a back test, I can't seem to leave money on the table. I've just got to take some profits. Okay, so let's just do it again. Let's close this one. Let's play through. Let's sell again here. Again, I'm doing this to try and get some drawdown, but the market just keeps dropping. It's typical. I wish life really did work like this. So entries logged. So let's go. Let's play through. Okay, well, there you go. Another one here. So let's go again. Let's just log our position 556. All right, there we go. So again, at the end, I'm gonna sum up all of this and just see what the overall return was. Bear in mind, it's 100k on this account. Again, it's just FX replays, not real. I mean, hopefully you see that by now. Okay, so again, entering at the bottom, hoping to get some drawdown so I can actually show you management, but it's just not seeming to happen. All right, let's see. Market seems to be slowing down here. Gap to the upside. Let's see if we can really get some upside to come. Okay, so we are. Oops, I need to pause that. Okay, so I'm going to enter again here. So I'm selling the market. Again, one lot. I don't know if I mentioned this earlier, but I do not. I don't change my position size. My position size always stays the same. It's fixed lots. So it's 0.8749. Right. Okay, so again, I just need to here figure out the average price. So average price is here. So again, let's just take this. Remember, again, it might seem tedious, but this is an absolute requirement if you go into DCA. You have to keep track of this average price. So again, we're going to just play through. Come on. I don't actually want profit this time. Come on. Again, nothing really happening. So we just play through. We just wait. This is a beautiful thing about DCA. You don't really have to do anything. It really is just a waiting game. Once you've got your entries in, market moves up, you add in. Market moves down, you can take some profits. It's really quite chill, actually. Okay. So I'm going to add in again here. So again, we're just going to add in our new position so we can get our new position size. So new position is at 1.08926. One position size. We've got a new average price. So again, let's just move this. Oops, is that right? Why is that not? Oh, okay. So we need to go 18, 19, 20. Yeah, there we go. Got the right column now. There we go. So you can see our average price is slightly moved here, back sort of to the middle trade now. So it makes a lot of sense. So we need to get into. We need to figure out, how do you want to have a threshold? My threshold is a 0.5% drawdown, which this trade, remember, this is a $100,000 account. So 0.5% drawdown on the biggest losing trade here will be $500. It's currently at 400. So I'm looking to exit this position soon, and then I will use that to then add in again. So yeah, we'll see how that works, if we can get something going. So what oh, never mind. Yeah, here. What I'm going to do is I'm going to cut this top position here. In fact, you know what? I'm not going to cut the top position. I'm just going to let it play out just so we can see what the result is here. Again, I'm wanting to really just show you sort of worst case or like average trades. Because obviously, so far it's been very easy, but I don't want that to be a misrepresentation. Because yes, you will have a lot of easy trades where it kind of just moves in your favor after a couple of hours. But obviously there are situations where you're going to get into trouble. Okay, so this is done now. I'm going to close out. Again, let me just manage the exits here. So it was 1.08319. And by the way, just so you know that this isn't like cherry picked. Obviously, like I said, I've not cut. I think I might have cut the video once at the start just so I could get into the FX replay thing. But this is May 2023. You know, we're playing through it live, well, on video for you, so you know I'm not trying to cherry pick perfect conditions or anything like that. Okay, there we go. So now you can see we're up 66 pips from that, made about $600 or $660. So we're going to close all of this, and that's that done. We can reset. So that sequence is now finished. So we're done with that. So again, let's just play through. Let's see what we can find. Also, another good habit to have is a drawdown threshold. So not for one position, but for the entire sequence. So let's say your max threshold is 2.5%. So you can have one position that reaches 0.5% drawdown. That's the threshold for that individual trade or that individual position. But the whole drawdown of the whole sequence can't reach more than 2.5%. If it does, you cut the biggest loser, regardless of its drawdown, and then you move forwards. That's another way to do it, and that is what I do as well. But obviously, I sort of manage the individual and the overall drawdown simultaneously, which again, we'll maybe go into that if I can get an opportunity here. So I'm going to sell again here. So we're going 1.08420. That's our entry. And again, we'll just play through. Nothing exciting just yet. I would also add, when we're doing accumulation, I'm not looking like here. I'm not looking to close out to $44. That really is just pointless. If we're looking to accumulate pips to offset future drawdowns, future losses, I'm looking to at least get sort of 10, 20 pips. At least then it's kind of relevant to the trade. Because a couple of pips, sure, it's fine. It's profit, but it doesn't really do anything in the grand scheme. So again, we'll take $97. That's okay. I'm fine with that. So again, we'll just take 1.083323. Oops, I do that. Is that right? That's not right, is it? Let me take that. 23, and this is yeah, that's right. 607, that wasn't right. Oh, it's because the formula here is wrong, that's why. Sorry guys, again, this is the downside of not editing everything. It's yeah, it's going to take me a little bit longer. Obviously, I know this is tedious to watch, but again, if you are serious about trading like this, it's good for you to see the whole process. Well, I could have held that. That'd have been a nice little runner, but it is what it is. Let's sell. Again, this one is kind of just hoping for some drawdown, so I can show you a little bit of management here. So again, we just log our entry 1.07647. Size is 1. There we go. Come on. Let's give us a challenge. Let's see if we can manage our way out of a terrible position. So I'm not looking to get in just yet. I'm not looking to get out just yet. I don't see a reason to really do anything here. Okay, there we go. I'm going to sell here. I got in a little late. Realistically, it would have been on this bullish candle. So I kind of, yeah, not a great situation there in terms of an entry. But again, we're not really too interested in sniper entries. We're more interested in just sort of building that position up. Is that right? Yeah, that is right, isn't it? Cool. So again, let's just play through. Oh, forgot. We need to get our average price. So let's again copy this over. This is wrong. So that should be 25. Is that right? 25? Yeah. Okay, so again, we just need to draw our line here just so we can get our average. And again, it's in the middle. That's our break-even level. Might look to enter again. I'm going to sell again here. Oops, there we go. So again, let me just sort the sheet out. So here the entry is at 1.07971. So we've got a new average price here. So that'll be 7. Oops. Hold on, let me just let me just fix this formula here. There we go. So that's the new average price. So again, let me just do this. There we go. Okay, cool. We've got a little bit of a... okay, so I'm going to sell here, and I'm going to close out this losing position. Remember, it's met our threshold. Now, this might be a little bit of an aggressive close, but again, it really, I would urge you to go and figure out the exact criteria for yourself, because it's not going to be the same for everyone. But let me, so this was the entry price here, but that's also the close price for this. Okay, so I'm just making sure we've got this correct. Is that right? Yes, that's right. Is that right? Sorry guys, I just need to make sure I've got all this done properly. So what row is this? 25, and this is also 25. There we go. So there you can see we've got our loss calculated here. So our average price is this level here. Now remember, the average price doesn't go up necessarily just because we added in higher. It also is accounting for the trade we just closed. So you can see the average price will... Oops, sorry, I'm just doing... So if we get down to this level, it's not just these trades that are break even, it's the entire sequence that's break even. Okay, so now, let's see here. Yeah, okay. Oh, big shoot up. One of those things. Let's see. Nothing we can do just yet. This might be the last one, because I think you should have the idea by now. I think I've explained pretty much everything. But let's just get out of this position. Let's just watch and see how we can get out properly without being in danger. I'm going to sell... I'm actually... no, I'm not going to sell just yet, actually. Let's see. Let's just let it run. So we can actually do some accumulation, but I've not had the opportunity yet. I'm going to sell again here, just because it's a high volume candle. So let's see if we can get a little bit of a... yeah, so I'm going to... I need to account for that. So this is why it's a little bit annoying to try and backtest this, because yes, the logging things takes a little bit of time. So 8.2, 8.4. But we're also closing that here. Just, again, accumulation. We're not looking to get this one to be a runner. 0.824. So the idea behind this one is it just offsets this initial loss. Obviously not by much. It's not a big one. It's not going to make us back to break even or anything. But it just assists. And that's the only thing there. It just offsets slightly. Okay, so let's get rid of that. Cool. So we're just sort of range bound here. There's nothing we can do. And what we could actually do is look to close out our lowest position if we start seeing any more upside come and we start breaking past these highs. This is the most painful thing about DCA, actually. It's not when the market's rallying against you, because at least then you can manage it and you can start bringing up the average price and doing things. This sideways market is horrible because there's just nothing you can do about it. Okay, we're out. So current close price now is at 1.07768. So we do that. We drag this down. We do this, and we also do this. So this would be... Okay, let me just redo that. There we go. So we made $188 on that. So you can see it's not really the case that we're making loads and loads of money, but it's the fact that we are just consistently winning. I mean, yes, we had a losing trade, but there hasn't been anything. In fact, I think that's the only losing trade we've had. Yeah, it is. So let's just have a look at some of the account stats. As I said, I think there's a couple of trades on here from when I first tried to record this video, but we can still have a look because I don't really think anything happened that I wouldn't have done anyway. Analytics. Yeah, here we go. So you can see total P&L on 100k. So that's 3.7% return. And all we've done is click sell. 95% win rate. We've had 20 trades. I mean, very small sample size. I know, I completely get it. So be skeptical. totally fine. I want you to be skeptical because I don't want someone to go and copy the strategy on a live account. That's not what this video is for, as I've already said. It's just to sort of display. I get asked all the time about my dollar cost averaging. So hopefully this video I can use in future to explain things. So you can see, yeah, 19 wins, 1 loss. The loss was only a 0.5% loss. Best win, again, 0.6, slightly better. But we're not... This isn't for high R&R. This isn't for sniper entries. This is a completely different approach to those. This is about being in the markets. The management is the edge. The management is how you actually make the money using the strategy. It's very simple. Very, very simple stuff. So yeah, you can see this was actually only a 1 month sample. 1 month. In fact, I don't think it wasn't even the full month, I don't think. But yeah, it's very, very good. So guys, I'm going to end it there because it's already a very long video. So if you've made it this far, comment DCA 99 just so I know how many people have actually watched the full video. But guys, have a great one. Thank you for watching if you have. And yeah, stay safe. Like and subscribe. You can join my Discord and my free Telegram with the link in the descriptions. Stay safe, and I'll speak to you very, very soon.